Welcome back to Market Beats YouTube channel. Today we are going to talk about a stock that is down 50% since the spring, and many investors are wondering if it will come back at all. NVIDIA is one of the technology names that saw their price and earnings multiples fall significantly because these companies are valued on the basis of growth of profits for the long term, the type of valuation that gets hit hard when long-term rates rise. That has landed the stock in the buy the dip bucket. But are we at the bottom of that dip? There are signs of bottoming, but it may still be too early. Thomas Hughes, Market Beat contributor, joins us to give his thoughts on a possible recovery for NVIDIA. Thomas, let's not beat around the bush on this one. Let's talk about what matters most to our viewers and our subscribers. Shares of NVIDIA are down 50% from their high. And go.
Well, NVIDIA, which is the leading chip maker for graphics and computerized visualization and to data centers to some extent, is suffering the same woes as most other businesses in the S&P 500. The pandemic caused a massive surge in spending at the same time that NVIDIA was forced to cut production, and that wiped out the shelves and the supply chain at all levels. So with the supply chain wiped out, that caused a wicked boost in demand for NVIDIA chips. That sparked a surge in revenue and earnings and outlook that turned out to be unsustainable. It was unsustainable because that surge was driven by pandemic stimulus money. Now that the industry is largely caught up with that pent-up demand and the drain in consumer goods, the demand for new products is also in decline. So that's a double whammy for share prices. They're not catching up with the old demand, and there's not new demand developing. The analysts are also not helping. They've been lowering targets and have the consensus rating and price target trending lower. As it is, there is really no sign of bottoming in the outlook, but this may change with the next earnings report. On the positive side, the analysts are still rating the stock a buy and see about 30% of upside, but that only counts for so much while the consensus is trending lower.
So bottom line here, Thomas, are we going back to 300 or are we in consolidation mode for the foreseeable future?
I think that there is a good possibility that the company will miss estimates and give a cloudy to poor outlook for the first half of the year. Headwinds persist in areas like gaming and cryptocurrency, and even in cloud spending, which has been supporting a large portion of the semiconductor industry. The upshot is that outlook for the back half of the year may begin to improve. There is still high demand for next generation products. So once the economy gets through this little rough patch, cough, 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 recession, NVIDIA should be in a good position to capitalize on these markets. As it is, the company is expected to post a double-digit decline in revenue and earnings and a margin contraction. This is not good news, and if it comes with a negative outlook, NVIDIA stock will likely fall to a new low.
Thomas, are the technicals any better here? What are you seeing in the chart?
Let's pull that chart up. The chart is promising. You can see the stock corrected, and now it's forming what looks like a head and shoulders. We've talked about head and shoulders before. You've got a low, and then a high, and then a lower low. You bounce up to another high that tests the neckline. We're testing the second shoulder right here, and the stock is moving higher ahead of earnings. The real question is, what will happen at earnings? If the stock moves up to this level, this resistance point, and earnings are bad, or the outlook is bad, the stock will fall back down. If the outlook is good, the stock could break through and start a new uptrend.
Okay, I have a few questions for you. Looking forward, can we really say the share price can regain some ground? What will it take to get this stock to see that reverse? I'm not looking for you to recommend anything here, Thomas, but what's your true feeling on this one?
I think what it will really take to get the semiconductor industry moving higher, and NVIDIA with it, is an improvement in the general outlook. Right now, the FOMC is putting the screws on every industry with higher interest rates, and that has the outlook for economic activity and business spending in the dumper. Once we get past the point of FOMC tightening and we can look forward to a normalized environment or a reduction in core interest rates, the outlook for business and consumer spending will improve, and the outlook for NVIDIA earnings will improve with it.
Thomas, you know that old needle in the haystack saying?
Uh-huh.
All right, well, that's what I imagine it feels like for investors to look for stock market resources you'll actually use. Nearly impossible. But your search is over. MarketBeat All Access has it all. Exclusive stock research and analysis, real-time market data, and alerts on the latest market trends. But that is not all, and don't just take my word for it. Dig into all of our resources at marketbeat.com. I've included a link in the description for you below. You can try out MarketBeat All Access for 30 days completely free. Before you head on over to marketbeat.com, don't forget to like this video and subscribe to our channel so you'll never miss a beat. All right, Thomas, thanks for sharing your thoughts with us today. I'll catch you next time.
Thanks, Lacey. See you next time.